It's time for another round in US-China trade talks. Chinese Vice Premier Liu He will resume negotiations with his US counterparts in Washington today. Will round 9 bring a breakthrough? Also coming up, Daimler opens a new factory in Moscow. The car maker is hoping to profit from a rapidly growing Russian market. Welcome to DW Business. I'm Monica Jones in Berlin. Good to have you with us. A Chinese delegation is making its way to Washington for more talks aimed at resolving the country's long-standing trade dispute. It's the 9th time the two sides are meeting to iron out their differences. US Treasury Secretary Steven Mnuchin described the last set as constructive, prompting hopes that a resolution could be close. But at a Republican fundraising event last night, US President Donald Trump continued to talk tough.
We are standing up to China's chronic trading abuses and theft of intellectual properties and so many other things that they've done to us. I don't know how you people allowed this to happen for so many years. You've been here longer than me. But they really have. They've taken advantage of our country. And you know what? I respect them for it. I say it. We should have been doing that to them.
Donald Trump talking last night. Now, in order to fix the trade imbalance, Washington imposed tariffs on Chinese goods, threatening to increase those tariffs from 10 to 25% unless the two sides can reach a deal. The US is pushing hard for improved market access in China. Washington is insisting on better protection against product piracy and wants an end to Beijing's practice of forcing foreign companies doing business in China to give local companies access to their intellectual property. The US is also taking aim at state subsidies in key technology sectors such as the semiconductor industry. At the same time, China is expected to further open its market for agricultural products from America. Now, the Chinese side, on the other hand, has already responded by imposing its own sanctions on US products. But Beijing is also expected to concede on some areas of conflict and make concessions on aspects such as the import of farm products. So now that we approach the 9th round of trade talks between China and the US, will it be the decisive round? Let's bring in DW's correspondent in Taipei, William Young. William, what can we expect from those talks today?
Yes, Monica, I think we can expect that both sides will try very hard to resolve the differences in how to implement and enforce the final trade deal. While China and the U.S. have resolved a lot of the outstanding issues in the last few rounds of the talks, two issues remain to be resolved in today's discussion. One of it is that Beijing still wants Washington to lift all the existing tariffs on Chinese goods, while Washington wants Beijing to agree to the terms of the enforcement mechanism, because it is very important to ensure that Beijing will abide by the rules.
Now, Beijing said it is ready to make concessions. How will that impact talks, and what are Chinese making of it?
So earlier this week, China announced that they will stop reapplying the tariffs on cars and auto parts imported from the U.S. And experts, they view it as another goodwill gesture from Beijing, because it shows that they're still willing to sit down and try to reach a final deal with the U.S. And with the optimisms that we have been hearing from both sides for the last few weeks, it shows that both sides are very knows the stake here very well. And if the talks that starts today that goes very well, it could pave way for Xi Jinping and Donald Trump to meet later in the near future and sign a final deal.
OK, so there could be another round in between. William Young, they're reporting from our studio in Taipei. Thank you so much. Now, the World Trade Organization warns that world trade growth is slowing at an alarming rate, blaming political instability caused by the US-China trade row and the mayhem surrounding Brexit. And the WTO isn't the only body sounding the alarm.
The world's leading financial institutions say the global economy is in a delicate position and it needs handling with care. The International Monetary Fund says the trade conflict between the US and China is to blame.
Specifically, we have looked at what might happen if tariffs on all goods traded between the US and China went up by 25 percentage points. That would entail a reduction of GDP of 0.6% for the United States and 1.5% for China. Do the math. Those are self-inflicted wounds that should be avoided.
Lagarde's message is clearly aimed at American and Chinese trade representatives. For weeks now, they've been trying to find a solution to their simmering trade conflict. The clock is ticking, and international economists hope the Trump administration will heed the warning.
All right, for more, let's bring in Janelle Dumalaun at the Frankfurt Stock Exchange. Good morning to you, Janelle. Amid all the doom and gloom, how's the market holding up?
Good morning, Monica. Well, pretty well, considering the DAX appears poised to follow the lead of Asian markets, which of course have been boosted by optimism over a potential US-China trade deal. Now, of course, there's been a lot of news for the markets to digest this week, that outlook just being one, the deadlock over Brexit being another. All of those bad news, to be sure, but none of them new bad news. And these are ongoing developments. The investors are very familiar with this narrative already. And we're only in the middle of the trading week, but from where I'm standing, there's been this trend to focus on the positives, say like strong data coming out of China, while ignoring the negatives, just say like that IMF outlook. But of course, you know, there are still risks in the form of surprise twists. Say there is no US-China trade deal, say it escalates, or that there's no clear way forward for Brexit. Well, then there'll definitely be a mood change here in the markets.
All right, so you say that for investors, the glass is never half empty but half full. They live in their own sort of sense of reality. And if you say, looking at some optimistic possibilities there, is there a light at the end of the tunnel?
Well, the IMF did say that growth is expected to pick up later this year, assuming the best case scenarios for those big concerns to the global economy, like trade and Brexit. That the Federal Reserve and central banks are also slowing down the pace of raising borrowing costs have tamped down recession fears somewhat. But Christine Lagarde also took this opportunity to once again advise governments to address the problems contributing to global economic weakness, like high deficit and debt, being better at being better at clamping down on tax avoidance. So that is something that governments have to do in order to be able to achieve that light at the end of the tunnel.
All right, Janelle Dumalaun there, reporting from a still empty Frankfurt Stock Exchange. Thank you so much. Now, as industrialized economies are struggling maintaining growth, Asia is powering ahead. In its latest economic outlook, the Asian Development Bank is once again forecasting growth rates of over 5% for the near future, driven largely by India and China. But analysts say where there is growth, there's also risk.
The red flags might have been waving bravely at the beginning of March in Beijing, but the People's Congress that took place then focused at first on risks and problems. Chinese Premier Li Keqiang blames the United States for slowing growth. Around half of all his country's exports to the U.S. have now been slapped with tariffs. China is the largest economy on the continent. Growth there is now hovering around 6%. That's lower than at any point since 1990, and it's having effects all over Asia. Continent-wide, growth slid to 6% in 2017, but last year it hit the skids even harder. In its forecast for 2019, the Asian Development Bank predicts growth numbers will continue to drop. It expects the trend to continue until at least 2020. And Asia is facing a range of other risks as well, including potentially serious disasters caused by climate change, like the record-breaking flooding that hit the southern Indian city of Kerala last year. It killed hundreds of people and destroyed the homes of over 200,000 more. In its report, the Development Bank also warned that these kinds of catastrophes would hit poor countries and regions hardest because their economies were especially vulnerable to the effects of climate change.
German luxury car maker Daimler is getting ready for what could be a high-profile event. Daimler's brand Mercedes will open a new plant in Moscow today. German Economy Minister Peter Altmaier will attend the ceremony, and Russian President Vladimir Putin is also expected to join. Russia's car market is growing again, and German car makers are all fighting for a piece of the pie.
Daimler is hitting the gas with its E-Series in Russia. The model is being built in Moscow, in this brand new factory. The German carmaker has pumped over 250 million euros into it. Soon it'll be cranking out SUVs as well. After years in the dumps, the Russian car market is growing again. This is the fifth largest market in Europe, so German companies are acting consistently by investing here and building up production sites. Daimler wants to profit from Russia's dynamic auto market. Around 1.8 million new vehicles were sold here in 2018, and sales are speeding up. Opel is also trying to get back on the Russian road. It left 3 years ago, but now wants to return. It's looking to open around 20 dealerships. The investment climate has improved, despite the fact that the country has been slapped with wide-ranging U.S. sanctions. The U.S. sanctions are counterproductive because they create uncertainty in the market and aren't specific enough. Pretty much any company can be affected by them. VW is investing in the Russian market for the long term with sites like this factory in Kaluga. Engines made here will go into models manufactured mostly in the Czech Republic and Spain. Things are less positive at Ford. It's looking to scale back its Russian production dramatically. The US-based company has been a loser in the price wars. Ford's main mistake was its pricing policy. Russians were used to cheap Ford cars that they could afford. Then Ford raised prices very quickly. Not as damaging a move in the luxury segment, perhaps. BMW customers are always more willing to splash out, but especially in Russia. The Russian market has potential. We increased sales by 20% last year and see room for growth, with new models fueling demand. And German car makers are only too eager to keep the customer satisfied.
And that's your business update here in DW from me and the team in Berlin. Thanks for keeping us company.